Let's go ahead and get started. I'm going to ask each of our panelists to introduce themselves, tell us as in-depth about their business and their buy here, pay here histories.
I'm Rick Johnson. I own Earl's Credit Auto Sales in Portsmouth, Virginia. Been in business for 20 years. I'm the sole owner. I have 1,000 accounts and about $8 million on the books. We have a very robust service center that does outside work as well. The average ACV is about $3,800, recon about $850. We have low down payments. They go between $399 and $799, and most of them are in the $444 down. We give an 18-month, 18,000-mile warranty. I switched from a service contract to a warranty, and there are lots of benefits to that, in my opinion. We have a repair payment plan for folks that do maintenance work down at our shop. The interest rate is 24%. Our repo rate is around 30%. We just started doing CPI, which I really like. A very high percentage is a repeat or referral. We allow people to trade when they get to $3,000 owed. And most of the notes on cars that have been out the first time are about 43 months, and ones that are recycled repos are about 36. I've begun buying online, and it's incredible. The one takeaway that will make you a lot of money from this is to look into buying vehicles online, especially like us, where you're in an area where there's just like one auction and all they sell is junk. But you've got people in that hall that do it and do it very well. So that's sort of my first takeaway. I'm married for 43 years and have 5 children, all grown on their own.
All right, great. Steve, just pull that microphone right up to you. You got to get right on it.
Got it. I'm Steve Wedding. I'm part owner of a 3-store buy here, pay here operation in Chattanooga and North Georgia called Auto Simple. We acquired the business right at the end of the year last year from the prior operator. They had about a $30 million portfolio that was pretty rough, and we did not buy the portfolio. We're collecting it for them for a fee. So we're basically a startup in this 3-store operation. We have a $6.5 million portfolio right now. Our amount financed is on average $12,900. Sale price is $12,750. Vehicle cost with recon $6,900. Our gross margins $5,850. Term, although they're bi-weekly contracts, the monthly equivalent is 46 months. Payment $425 a month. Down payment $875. Our interest rate is $21.99. The typical car we sell is a 4 to 7-year-old car with 80 to 120,000 miles that we've acquired from an auction. We do CPI as well. We have a 12-month, 12,000-mile warranty. And anything else you want to know, we'll get through Q&A.
All right, thanks. Scott?
Well, I get the pleasure of being the small dealer on the panel. I always love this. This is my favorite thing. I'm a small buy here, pay here dealer in the business since 1991, so we're coming up on 30 years. My model has stayed pretty much the same for all 30 years. Right now, I'm retailing a vehicle between $5,000 and $9,000. My average ACV is probably around $3,000. I have just under 300 notes and right around $2 million in receivables, 7 employees. And so I think I kind of make up the majority of the independent space. I know that NIADA members, about 80% of the membership are 50 million or less and 50 employees or less, and I'd like to say that probably 90% of that 80% is more like $10 million in receivables or less and 10 employees or less. I know there's a lot of you out there. I've met several of you today, in fact, some newcomers, small operations. So Our average recon for a vehicle, I didn't write really good notes like these guys did for all my cars, but all my stats. But our average recon is about $400. I said my average ACV has been around 3,000. Our notes are 24 months or less, so I've stayed at a very short note for my duration. The one thing that we've done most recently is raised our payments. I know I heard Ken talking about it, about inflation. I know that for about 20 years I was a $60 to $75 weekly scheduled payment for my customers. Now we're up to about 90. So it's definitely helped catching back up with inflation. What we did find out is if you don't ask for it, you're not going to get it, just like Ken said. So I think that's pretty much the gist of my operation.
All right, talk about the money, Scott, and where you got your line of credit, where you got a lot of first-time attendees here, people new to the business. Talk about the struggles of, you're what I consider true buy here, pay here, one operation, 7 employees. You know, you're what a lot of people out here with 3 employees or just starting up want to be. So can you walk us through the headaches of getting there with the financing?
Sure. Well, as you guys know, of course, it's extremely capital intensive. Back when I started in '91, I started with $500,000. That's what we started with. We had to invest another $300,000 into the company in year 2, somewhere around 2.5, to continue the growth. And that's kind of where I've stayed. This company, I mean, I will tell you, the financing part of it is the hardest part. We did finance it with private funds. It was our own money. However, we did have to borrow some money from the bank, and I would suggest, I'm in a small town, Haltom City. It's just outside of Dallas or Fort Worth, if you know where the area is, but it's a small town. Made a relationship with a local bank. At that time, it was called Northwest Bank, and they had like 3 locations. Developed a relationship there by opening accounts, brought my personal accounts over, did some other things with them. Then got a line of credit, which I've had now. It's kind of an evergreen note that I've had for 20 years that we use for purchasing our inventory. But it was that relationship that I built with that bank, and them having a very good knowledge of how I run my business. I will say that one thing that I've done is stick to my model. I did try to, I will say, kind of like some of these other folks too, I decided to open up some other locations. I got up to 3 locations and 500 accounts, and I found out that I was working 2 or 3 times as hard, and I wasn't making any more money than I was when I was one store with 200, 250 notes. So downsized that back to an operation that I felt like I could handle, and I could actually make more money at that level than I could at the larger level. So for me, it was establishing relationships with a local bank. That bank actually ended up getting bought out by another larger bank, Prosperity Bank. Now it's publicly traded, and my financials are scrutinized much closer than they ever have been before. But it was that, you can't get those handshake deals anymore, but it was that kind of handshake deal in the beginning that got that relationship started. That's...
You know, that's a great point, what you said about the finance. And one thing that I've seen happen year after year after year is somebody have a great relationship with a small local bank, and then they get bought out by a bigger bank, and the rules all change. They don't understand it, and they don't really know you. And so I've always encouraged people to try to get a 3-year banking deal instead of a 1-year.
Well, it's hard to do in this market.
Yep.
It really is, and it's like year by year. But I wanted to share with you how I got started in the financing area. And interestingly, every person that I have used, have been a client of, is in this building. And I started with $150,000, and sold a lot of Escorts, Tempos, that kind of stuff, early Hyundais, you name it. But the first thing I did was do the income stream, where I took down actually $25,000. I bought 10 cars, and the money from that paid off provided the money to pay back the stream, and that left me the rest of the note to actually have cash flow, or actually to I'm out of the loan. I then went with another company here that was basically an underwriter of the cars. I then went with another that was a portfolio lender, and now I'm with a, well, it was a bank. They sold their notes to someone who's here, and there it's a true line of credit, and I'm paying 10% and have 2.3 million on the books. But don't let the high interest rates scare you away. Figure out what your internal rate of return is on the money on the street. My guess is it's around 120% per year. And you can just figure it on a mortgage calculator. It's really easy to figure out. So don't say, I just can't afford to take it down because it's 13%. I don't think that's the way to go.
That's great. Thanks, Rick. You and Steve both mentioned that you're doing CPI. Again, we use a lot of acronyms in this business. Explain CPI to everybody and why you use it and what you like about it. Steve, we'll start with you and then come back to Rick.
Sure. So CPI is collateral protection insurance. And it's basically, I mean, big problem in this industry is customers maintaining their insurance because they can't afford it, and in many cases. And obviously, we want to get our loan payment first. But in order to be sure that the collateral is adequately protected, CPI is a product that provides physical damage insurance to the customer, but as the lender, you get the benefit of those insurance proceeds, and it's much more affordable in my experience, both when I was with J.D. Byrider and now with AutoSimple. Two big players in the market. Rick uses the other one. We use ARS. We use ARS at AutoSimple because of, again, my prior experience at J.D. Byrider. ARS went the extra mile to make sure that there was compliance with the insurance commissions in various states in which Byrider did business, so that we could not only offer the product as a force-placed product, but could also offer it to customers on the front end when they were unable to get affordable insurance. The other player is Buckeye, and I'll let Rick talk about them.
The interesting thing about CPI is the customer's willingness to take it on. And basically the approach is with CPI is, I know that if you have full coverage, you need to shop for full coverage, comp and collision. In the meantime, I'm going to put CPI in place, and you have a week to look around. If you find something better than $18 a week, $36 bi-weekly, or $76 a month, fine. You can put that in place, and we'll cancel your CPI, and you don't owe us a dime. And so it's hard to say no to something like that. And in our market in Eastern Virginia, it's pretty difficult to get a full coverage comp and collision for $76 a month.
Okay, so you don't require full coverage.
I do require full coverage.
You require full coverage
yes.
plus this?
No, just
one or the
CPI,
other.
because CPI does the work of comp and collision.
Okay,
Has
so
a
it's one or the other.
$500 deductible, pays off the car if it's, and it's my money. So I'm effectively underwriting the whole thing myself. And it's reinsured, and the people from either of the companies will be able to explain it. But it's a great source of, I think, ultimately cash flow, although I have a lot of totals, so I'm not so sure how much I'm going to make. But
You're
at least
hoping
I have
for
a little
cash
bit
flow.
better control of it, and I don't have anybody out there that's not insured, and it's if their insurance cancels in everybody's contract, it says that you can force place it, and that's what you do.
So we got two big believers in CPI. Scott, you didn't mention it.
Yeah, no, I didn't mention it because I don't have it.
Okay.
But I will mention something else that I'm looking into, and I've looked at CPI with 2 or 3 different other companies. My penetration, I don't think, would be deep enough for me to really make that work. And my cars are definitely a different type of car than what these guys are selling as well. But debt cancellation agreements are something that I've been looking into for the last year or so, and maybe using in my business, and it works in similar ways as a CPI program. It's not an insurance product. You know, it's a way for a customer to pay a certain fee each month, $40 a month, which would, in the case of a total loss situation where they're not covered, they're only carrying liability insurance, it would pay off their debt with me by carrying a debt cancellation. So that's something I'm looking into right now.
So he's been in business 30 years, but he's still looking at ways to improve his business. That's awesome. Dave, a question in the back of the room.
So with you guys that carry the CPI, do you track their liability insurance? Do you require them to have liability insurance, or is that just?
So in Tennessee, in order to issue a temporary tag, they have to have liability insurance at time of sale. So yes, we make sure that happens. After the fact, after they've got their permanent tags, no.
Same answer.
So you make them provide a copy of their liability insurance to take the vehicle from the lot?
Absolutely.
Yes.
Okay.
Same in North Carolina. Got to have it before they leave the lot. Sometimes I feel like we're being the insurance police, and but it's the requirement, so we have to do it. Let's see, Steve, Auto Simple, 3 locations y'all acquired, but you didn't have to buy the portfolio. I thought that's interesting, but you are collecting it for them.
Right.
Were the locations leased, or did you just sublease the leases, or were they purchased, or?
Yeah, so both. Some of them were owned by the prior owner, and we're leasing those directly. Others were leased, and we're subleasing those. So, and then we didn't buy the portfolio just because we didn't want to take on the risk. We didn't feel like we could adequately price it. So instead, we're collecting it for them at per every dollar we collect, we keep 8 cents, and that basically is covering the collector group that was there. So as their portfolio weans down and ours builds up, we've got experienced collectors to just shift right over. It helped with the capitalization of the business too.
All right, I think that's wonderful. Now here's somebody that's bought into a business. They didn't have to buy the portfolio, because you're always arguing what it's worth, 60 cents, 80 cents. They'd never gotten together. He turns that on them and says, hey, I'll just collect it for you for a fee. So now he's got cash flow. Now he's got collectors. It's really genius. And you're looking to grow your business, maybe that's a great way to go from 1 location to 2, or 2 to 5, or whatever. Dave, middle of the room.
Yeah, what is your collection experience on CPI? Are you collecting on a timely basis?
It's too early to tell, but I'm going to collect the CPI first.
So
the whole idea is you collect it first, because that's their full coverage. They don't have full coverage if they don't have CPI. You got to go one way or the other. So that gets collected first.
You're able to keep up with that through your DMS?
Yes, and the software company that we use, you actually, when you take the payment for the CPI, it drops down into a CPI account, and then whatever's in that account at the end of the month, you send to I guess it's, in this case, it's Berkshire.
So Rick, your customer comes in, they got $75. They don't have the 18 this week for the insurance. You're going to take it out of the $75, make sure the insurance is paid. You're going to leave them a little short on their car payment. Is that right?
Yeah. But
Okay.
that's coming out first, and you got to train them. And it's the folks that we are going to force place that there may be discussion, but it's very clear going in. And there's a checklist of about 13 items that they initial that basically where they're saying we know how this works.
Okay, Steve, you had a comment on that?
Yeah, one word of caution there, because of my experience at JD Byrider, where we were under CFPB supervision because of our size. You might want to check with your lawyers about whether you can take CPI first, because I actually think that the CFPB will tell you you need to take the customer's payment first. But just
Okay.
check that out.
Yep.
Okay, that's something we need to put on our takeaway list here. Let's look into the legalities of car payment versus taking, us deciding what it is and
Yes.
not. That's really good input, Steve, and everybody put that on your to-do list. Got a question here in the center of the room from a local dealer. Al, introduce yourself and tell them just a sentence about your business.
Well, we've been in business since 1984. We have 3 locations. We're here in Chicago. I've used CPI. We make a lot of money on CPI. It's a great product. But I have a question for a gentleman right there. What do you get for $400 when you recon the vehicles?
What do I get? Yeah.
This is for Scott, right? He's really amazed how low that ACV is. That would probably cost, to get it vacuumed out in Chicago is probably $400.
Probably so. I can get a complete car detail for $50.
Complete car details, $50.
So it's mechanical. It's all mechanical. I don't do any cosmetic work. Very little cosmetic work whatsoever. Whether it's, little dings and dents, we call them lucky dents. It's all mechanical. So we try to address just certain, we have certain issues that we go through during the point inspections, but then it's just whether the car needs mechanical issues, and that's all we're looking for typically.
That's awesome. Al, how many a month are you selling from those locations?
Close to 100.
Close to 100 a month. So there's a great resource. If I'm here and I'm a new dealer, I'm going to be tracking this guy down because he's local. I'll be trying tomorrow to say, hey, let's go look at your operation. Wednesday, I got a late flight. Can I come by and see your store? That's the kind of networking I want y'all to think about doing while you're here to get your money's worth out of this show. Dave, over to you.
Yeah, I got a question for Steve. Why did you guys buy those 3 locations, those businesses, and how did you guys evaluate them, the purchase price? Is that based on annual revenue or the location? Instead of opening up 3 new locations, how did you guys come up with that figure to buy those 3? Because you get people telling you what your business is worth, but with buy here, pay here, I don't, I'm just curious.
Yeah, so these were distressed businesses, well capitalized, but distressed businesses. They were selling 165 cars a month out of 3 locations, and the portfolio showed it, just to be frank. So they were looking to get out and frankly sell their portfolio, but they could not find a buyer. So we came in and said, look, we will continue to run these operations so that your existing customer base will come and make payments. We will collect them for you for the 8 cents on the dollar fee. And we basically paid for the fixed assets at a depreciated value, and that was it. So there was no valuation of the business. This was basically get me out, and we got them out. And the reason why we didn't start from scratch is because we wanted the personnel. There was a great operator there that they had brought in kind of too late. We wanted him as part of our team. He is one of the owners. So that was the logic behind it. I can't necessarily tell you that this is repeatable somewhere else. Although I can tell you at JD Byrider, we had existing franchisees take over failing franchisees for similar structures. So I've seen it done before, but not on the scale we're doing it here.
That's awesome, Stephen. Also, likewise, we need to talk about that fella's portfolio that he couldn't sell. You know, what kept that? Because I've heard horror stories in this business. We work our whole lives to build this portfolio, and then we go to sell it, and we find out because an I's not dotted or a T's not crossed or our contracts are wrong, or we weren't checking this box or checking that box, not that they were hoping they were worth 85 cents, they're only worth 60, they won't buy them at any price. So, Steve, can you comment on things, maybe not in that operation, but just things you've seen that can make, and this guy couldn't sell at any price for some reason, so.
Yeah, well, they could have sold at a certain price, but they had levered part of it, so they just couldn't get out from underneath their debt and needed it to be collected out. So that's what went on there. At Byrider, we didn't really have any issues with documentation because we spent a lot of money making sure that our contracts were right and everything. So valuation was all just simply about the quality of the portfolio.
And how is that portfolio performing compared to what you anticipated or?
Yeah, so actually, the forecasting I did for the new business, we've missed on sales. So that's been where I've missed. The one place that I was right on the forecast was forecasting how this portfolio was going to run off. And so our 8% collection fee that we had built into our model, we're hitting it almost dead on. So
So it's not a big windfall for you. It's mainly a service for the
Yep.
person you bought from. Yeah.
Yep.
All right, Rick, a lot of people in here admire you for what you've done about buying online. You know, you're a little long in the tooth to start that now. I'm proud of you.
Well, thank you.
But can you tell how you had the guts to do it or what step you took? Because there are a lot of guys your age that are like, listen, I've been doing it this way 40 years. I'm going to keep doing it this way. I think it's awesome that you're doing that. Talk about how you took steps to do it.
I was at a 20 group meeting, and time to plug a 20 group, you really have to look at it if you're not a member. So I'm sitting in my 20 group meeting, and next to me is an operator whose numbers match mine. We are almost the same per month, everything. And I said, what are you doing? He was sitting there. He said, I'm buying cars. And the car that he was buying or bought as I was sitting there was at a franchise dealer 20 miles from me. So I said, I think I better look into this. And what happens on all of these folks, and I think there are 4 in the room that do this, you can buy them all effectively green light. You can look at, you can hear the motor running. They will tell you where everything is not right. There's a scratch here, there's a dent there, the power steering pump doesn't work, on and on and on. And so you bid. If you are the high bidder, they accept it. If it's if 2 people are basically tied at the same price, they'll keep it going. And then if it's not acceptable to the seller, you can negotiate with them. Every vehicle that we've bought so far has been exactly as advertised. With an exception, we had an Escort 2013 that came in, the transmission was out, and there was a recall for the transmission. Our average recon is a little bit over $200 right now. Probably a little bit higher because we have some 4 or 5, but I have like $200 built in to put the GPS in and all the other stuff. But it allows me to literally get a car in the morning, take it down to my shop, check it out, have it inspected, and have it in my lot that afternoon.
What's the state inspection cost, Rick? I mean, you're blowing everybody away $200 on recon. It's amazing.
In Virginia, it's $20. However, my service manager has effectively the license to be an inspection station. So we have it in-house, and we don't fudge. People complain, we give them the number of the state trooper. Come on down.
Wow. All right, Rick's at 200. Scott was 400, I believe. Steve, what was your reconditioning? Tell us it's something realistic.
Yeah,
Make us feel a little less inadequate.
Just a minute. My average recon is about $850. It's only for these trade rev, Al said it. It's only for my the online buys that it's so low. You don't even have to detail it.
That's
you
a
don't have
great
to clean
point.
it.
So
you don't have to do anything.
his average is 800, but on the cars he's buying online, only spending 200 for it. What a great commercial for buying online. Steve, what was your average reconditioning?
I didn't have it on here, but it's around 1,000, and it's bloated a little bit because we had our own recon center. We've just recently dismantled all that, and we're subbing things out now. So
What are you doing with that space, the space that was the center?
we are talking to some potential subtenants that might actually make us some money.
Yeah, that's awesome. A lot of ways to skin this cat. Remember, what you're hearing here is not the way to do it, it's just a way to do it. And so there are a lot of different ways to do it. Chuck, over to you.
Yeah, what's your secret sauce to the underwriting? You use a scoring system, debt to income. What are you looking at? Yeah, all 3.
Let's just do all 3 of these. Scott, start with you and come down. That's a great question.
Yeah, well, I think it's very little has changed in the underwriting process still. Debt to income is still something we look at. I mean, it's still time on residency, time on job, the last 5 years history. It used to be big in references, but GPSs have kind of changed that. References aren't as important as they used to be. But very little has changed in the underwriting. It's still the same as it was for me 20 years ago.
Okay, Steve?
Yeah, similar for us. Because of my experience at Byrider, we had our proprietary scoring system, which obviously I don't have access to as an independent. But I wanted some baseline scoring system as part of our model, so we do use AutoZoom as just another element. It doesn't make the decisions or anything, but it's a baseline, consistent credit scoring system that we use along with all the traditional things that you analyze as you underwrite the deal, and affordability being a big factor, making sure the customer can afford the payment.
They must live within 40 miles. They must net $2,000 a month. They cannot have a bankruptcy. They cannot have a repossession within like the last 5 years. We use AutoZoom, and it has really been good because it confirms their stability, and then it measures their stability against the income and as you structure the deal. So in using it, it's just a guideline, but it makes you occasionally step back and say, well, this looks better. It's borderline, and it's a 650 score on AutoZoom. I'll do it.
All right, there's 2 of the 3 panelists using AutoZoom. You know, I don't want to do a commercial for them right now, but that's something I'd put on my to-do list. Let's look into it, you know, and see if that's something that could be right for us. I never used it, but it's my understanding that it can be customized a little bit for your operation. Think about this. I just called back. How many did y'all sell today? You know, you got out 8. Okay, wouldn't it be better if I called back and said, hey, of the 8 you sold, you know, how many were A? How many were B, C, D? You know, I'd have a lot more information then than I have now if I had some type of AutoZoom score. Dealer here from Peoria, Illinois, Bill Bart. He says, I want to know what you guys' warranty covers, and is it free?
Warranty is going to be embedded in the price of the car, and there's no separate charge for it. An extended service contract is an optional product that is presented to the customer, and they choose whether to buy it or not. The coverages could be identical under those 2, but that's the distinction between a warranty and a service contract. At AutoSimple, we do a warranty. It's 12-month, 12,000 mile, and it is limited warranty, powertrain, and some other key components. We also do cover air conditioning, and I can't remember, there's another typical thing that we, in the South, that we add on, but and it's not free, obviously. Our gross margins reflect the fact that we're providing this service, but it's not separately priced.
I had a service contract and used it for years, and it had to be sold. And the people that needed it the most wouldn't get it in the first place, and then they would cancel it, and I'm back at square one. So my warranty is 18 months, 18,000 miles. Engine, transmission, final drive assembly, air conditioning, the cooling system. And it has a $200 deductible.
Okay, and Steve, I guess you reserve some for that when you give this 12-12 to
Yes.
them? You're setting up so much in a reserve?
Yeah, we set up $300.
$300 in a reserve for that.
We're the same.
Okay, great. Scott, you want to speak about your warranty? or-
Sure, they're not, the warranty providers and service providers aren't going to like me very much here at this conference because I've tried them both. And for the type of cars that I sell, a third-party warranty was what I was looking at, third-party service contracts. And just like we were saying down at the end of the table about the customers that needed it didn't buy it, and the ones that did buy it didn't really need it kind of thing. So I have relied on side notes. I've got a long page of checklists that all my customers are very familiar with of how they qualify for this particular service. And if their account is current, if they're in good standing, then we'll take their vehicle in. We'll take it to a shop. I do not have my own shop. Everything is outsourced, so I will get an estimate, call the customer and let them know. It says right there in the policies that we're going to be charging retail for the parts, and we're going to mark up the labor 50%, but you're only going to need 25% of that cost of whatever the repair is up front. So if it's a $400 repair, sir, just for easy math, it's going to be $100. That's all you're going to need to get your car repaired today, and we're going to set you up on a side note. So my customers have come very familiar with that type of a program. They actually like that kind of program, and a lot of them come back to me because they know I'm going to help them get their cars fixed.
That's great. I know when I started in this business in 1989 or so, we'd start calling the accounts when they were $500 balance, and then over the years it went to $1,000, and then $1,500, $2,000, and Rick, you said $3,000. Y'all will start soliciting their business to try to sell them again.
Exactly.
Steve, do you or Scott have a number?
Actually, I've talked to Jim, operating partner, and 3,000 is the number we're doing. It was a little lower at Byrider, but 3,000 at AutoSimple.
Yeah, ours was a percentage, 20% of the note paid, and now it's 25, and it might be going up some more. So, I mean, we're grabbing those customers as fast as we went back in last month and went a little bit further out. You've got to put those customers back in another car. You don't want them to get close to the end. When they get close to the end, they can smell it. They can see the light at the end of the tunnel, too, and sometimes they want to wait to get to the end. They want to see how far this car will go, and then you have that chance of losing them. I don't ever want that to happen, so I'm constantly raising that bar just a little bit more all the time.
That's great. Great answer. Here on the second row.
So the question is for all you three, and it's about loaners, Ubers, or car rentals. Do you provide any of them to your customers when the car breaks down?
We're not required, of course, to do it. I'll Uber them home. I'll Uber them back. If it is under the warranty, it's not stated in the warranty, but we will occasionally get people. It used to be in the service contract. That's why I stumbled. But if they need a rental and they're a great customer, I'm going to put them in a rental. We're just going to make sure they get back and forth to work.
One of your cars or like an Enterprise?
No, an Enterprise car. We don't have a rental.
Yep.
I looked at it, said I don't want it. And then with a loaner, they're not in the greatest mechanical condition. And so I don't like to do that. Although there are people out there, guy in this room that has white Impalas, and those are his loaners. Has what? 8, 10,
Wow.
15. Yep. And I like that a lot.
I like that a lot too. I think we need to think about putting that on our takeaway list. White Impalas make good loaner cars.
They sure do. They make good cars as hell too.
You don't want to give them a Corvette, whatever, a Range Rover loaner, you'll never have it back. Steve?
So our warranty clearly states we don't do loaners, and then we do loaners.
Right. See, that's what I love
for
about this
exception.
business is for every rule, there's an exception.
Yeah. So, and obviously it's not in every case, and they have to have proof of insurance, but it's when there's a mechanical failure very early in the contract. I mean, it's just, you're going to lose that customer, you're going to take care of them. And so we do have 3 vehicles that are loaner vehicles for those rare circumstances, but the warranty clearly states we do not provide loaners. So.
That's great. Scott?
It's the same thing. I do not provide loaners, just like these gentlemen here. I mean, in the beginning of the contract, if you've got a problem, you're going to have to do something to help them. So, yes, I have loan cars, but do not have loaner cars. And what I tell my customers too, I told them, like when they're on the repair program, they want to get their car fixed. But I got to get to work. I got to do this. I got to do that. And I said, I know. I'm just like you. I said, but I have been working for years on trying to figure out how to touch a mechanic to the bottom of your car and fix it while you're driving. But I just haven't figured out that yet. I can't get the lawyers or the insurance people to write me a policy for that. So you're just going to have to make arrangements to drop your car off so that I can work on it. And as soon as it's ready, and I'm going to get it back to you as quick as I can. But I try to avoid loaning cars.
Just being real.
Yeah, just be real.
Since this attendee brought up Uber, how about will you sell a car knowing that it's going to be used for an Uber driver? And then likewise, what if you find out after the sale and the account's current, they're Uber drivers? Is there going to be any consequence for that? Anybody want to address that?
If I know that they're going to drive Uber or Lyft, and lots of times they'll tell you, I won't sell them a vehicle. if they drive up with a Uber or Lyft, the contract, the retail installment contract, allows me to actually repossess it. I've never repossessed one. And what I do I just make them cash and carry at my service facility rather than doing the repair payment plan that's $200 when they pick it up and $20 a week.
Is your service facility on the same premise as your car lot?
It's a half mile down the road. It's
Mile down
a
the road.
former, it's a 1960s new car dealership. Just
And do
imagine.
you do work for the public or just your cars?
Public, we do about outside $45,000–$50,000 a month. So it doesn't totally cover the overhead down there.
Right.
And it gets tougher and tougher as, I need to push 15 cars a week to the lot.
How many mechanics do you have down there?
I have 6. I have a body shop that has 5 people in there.
Wow.
And our collections, we have 3 collectors, and they're also at this place. The actual, if you ever Google Earl's Credit Auto Sales, you'll see the 1950s service station sitting there, but it's been a buy here, pay here store for like 60 years.
6 mechanics and only 3 collectors.
Yeah.
Wow.
Yeah.
Okay.
Yeah. And we have about 240 on recurring payments.
Okay. This dealer wants to know, do you sell any vehicles retail, or are you just 100% buy here, pay here? What's your policy on cash deals and subprime or secondary deals? Scott, start with you.
Yeah, sure. All the cars are priced with one price. There's no two-tier pricing. As you guys know, you can't do that. So for cash vehicles, the price is the price. What was the other part? I forgot what the other part of the question was, Ingram.
Do you do any retail or just buy here, pay here?
Oh, it's strictly buy here, pay here. I will say that I did try retail for about 2 years. Did it on the same location. I had, these cars on one end of the lot and these cars on the other end of the lot. Did not work well for me at all. In fact, all my customers, all my good customers gravitated over to the new cars, to the nicer cars that were going to retail. For me, it didn't really work out that well. I think if I had separated it, it might have worked a little bit better, but that's 100% buy here, pay here.
That makes me feel better because I failed miserably at that too, and I always envied the guys that could do both because it helped cash flow so much. If a genie popped out of the lantern, I would definitely do both because, I like to get my money now and it helps your cash flow issues, but we never were successful at it, and good to hear that. Steve, same with you.
So obviously it's one price, and if we have a retail customer, they're paying the full boat that would have been financed under a buy here, pay here deal. One thing we are doing is we underwrite every deal for ourselves. If we are going to decline the customer, then we put it through the CAP system, which is CAC, every single deal. And we present to the customer an approval sheet from CAC. Oftentimes the down payments are exorbitant, but we do about 10% of our volume every month with CAC.
See, how's that relationship? Do you like that?
Yeah, it's good.
It's good.
I mean, and obviously we net less on that, but we have no risk. We're cashed out of those deals.
What do you net on those deals? Guess.
We're averaging about $1,400 a copy.
Okay, if you got a dealer out here in the room.
On declined deals. I mean,
right.
we were sending them away otherwise, so.
So the stuff that he cannot get done, he's taking them CAC, getting $1,400 before they leave. So, and you recommend that to a small dealer? Sounds good.
Yeah, I
You need
mean,
to look into it.
Looking at our capitalization and everything, it made sense for us. So, I mean, you got to look at it and see. I mean, cars are hard to come by, and if $1,400 isn't enough, then I wouldn't do it. But for us,
It's
it
good.
made sense.
All right, Rick, same question.
100% buy here, pay here at the sales lot. We have a separate company that's domiciled at service. And when we get our trade-ins, it gives us an alternative to taking them to the auction. If the recon is more than like $400 or $500, we don't do it. We just ship them to the sale.
Okay, Chuck, over to you.
It's like a two-part question, but it ties in. How are you guys getting your leads, you generating, and what are your advertising costs, how you spending it, and, I guess per month?
All right, wants to know about the marketing. How do you make the door swing and the phone ring?
I'll go.
Sure.
I like free 99. That's my favorite price. As far as leads go, I've tried every third-party lead generator. I mean, my cars are, I'm a little bit lower on the end of the scale, as we talked about already. Those leads that I'm provided with never did really amount to anything. So I've found that organically finding them myself, grooming my own is the best way to go. I mean, years ago, Craigslist was a good place because it was free at a time, and my guys were just pounding that. Facebook Marketplace is another one of those places where we are, group pages, county buy, sell, and trade pages, things like that. I do not use a single third-party lead generator right now. I do try to generate whatever traffic that I can find on the internet or however where it leads to our website. That's where I want them to come, and I don't spend any money in advertising.
Wow, it's amazing. Steve?
So we buy leads from ACE. For the 3 lots, I think we spend, I don't know, somewhere around $8,000 or $9,000 a month. We blow money periodically on radio, which isn't good. We have invested in a green screen and proper lighting, and we do a ton of videos that are posted on Facebook and on our website, featuring cars, talking about our program and our offering, talking about our warranty, all of those things. And so social media and Facebook is a huge part of what we're doing, and that's money better spent than, at least for us, on radio, which gets you some awareness, but otherwise it doesn't do anything.
I think that's a great takeaway we need to put down. I'm hearing that, Facebook and the social media, that videos are king, and you got to do the videos. And so he just said to have a green screen, right? That's something we all need to put on our takeaway list. Look into a green screen, and what does it cost, and how do we implement it? Because we do know that video is the way of the social media, and you have to have the video content. So, Rick, same question.
We get a fair amount of drive-bys, but that's probably the lower of the other 3. Repeat and referral is a significant amount. And then we're on Facebook. We got, we're coming up on 10,000 Facebook friends. So if you do a blast, we'll do a blast and reach like 25,000 people. And we do the $3.99 down as well.
All right, question here on the third row.
I was going to ask you about your DMS system, and are you satisfied with it?
Quickly, your DMS, who you with, and are you satisfied?
AutoStar, CountMate, and we're looking.
Okay, Steve?
So we were, the old system was Fusion, which I think might be the same thing. We're with Dealer Sockets IDMS, and it is a comprehensive system. I'm not real happy with some of the accounting coding that goes on. I spend a lot of time writing a bunch of journal entries at the end of the month to get the financials right. It's infuriating, but.
Great answer. Thanks, Steve. Rick?
We went from AutoStar to AMS, AutoMaster Systems. We like it. It's robust. It can run any dealership in the country, really. I mean, it's over the top for us, but we like it, and you can reach technical support anytime, and we have a lot of Saturdays for some reason that it goes down, and we show up at 8 o'clock, they answer the phone, and typically within 30 minutes it's back up. But I don't think anybody is ever totally satisfied with a DMS.
That's right. Thanks, Rick. Question?
Yeah, I have a question for Steve. Coming from Supreme Financing, how do you deal with LTV requirements and, when you send deals to a finance company? Because usually they have very strict LTV requirements. How do you deal with that with your customer? Do you lower the price, or how do you deal, or the fees? Because it's a combination, low LTVs and big fees.
Right. So obviously for our own deals, we know what our deal structure is. We bought the car right in the first place and all that. With CAC, it's just sometimes they say you need 8,000 down to be approved, and that's what we present to the customer, and it is what it is. But at least we're able to say that every customer is approved, and we go the extra mile. Not only do we evaluate that customer and decide whether we're going to approve them, but we then go into the CAP system and we're able to show them a deal that would be doable but it may be a unrealistic down payment.
Steve, you said your volume was one thing you missed on the acquisition. What was your strike point and what are you doing?
Yeah, so it's not great. As I said, they were selling about 165 units a month and had a terrible portfolio. My analysis said that in talking to the team there and everything, we thought we could sell 120 cars a month on average, so knocking 45 off. And 90 was about our break even, and we've been below break even. So it's been brutal, which is part of the reason why we have shut down our recon center and stripped a bunch of overhead out. And we've got our break even down substantially. And we've not given up on getting the volume back. We're going to get the volume up there, but we just couldn't bleed to death any longer. So,
all right, y'all, that's one. Chuck, 1 second. Chuck, I'm going to make a comment. That's one of the smartest guys in buy here, pay here in the history of this industry right there in the center. And you heard him say he's not hitting his mark, so what's he doing? Making changes. He's bobbing and weaving, and he's having to adjust because it's not what he thought it would be. So that's great input. Yeah, Chuck, over to you, and then I'll wrap it up.
How do you price your vehicles?
I mark them up $6,000.
yeah, we're in the ballpark of that too. And by the way, Ingram, I want a shot at the key takeaway at the end.
Okay,
So,
great.
4,500.
All right, let's do that. You can learn a lot about what to do at this convention, but you can learn a lot by knowing what not to do. What mistake have you guys made over the year that you could help us avoid out here? Y'all been doing it a long time, Scott, all of you. What is something over the years that you should have done different? I'll start and let you know that probably the biggest mistake I ever made was that we started doing what I call strong arm collections. We wouldn't take partial payments. You know, I just felt like people were taking advantage of us, and we have a drive-through window, and I just said, we're done with taking partial payments. Let's tell them to pull around. They'd pull around. We'd block the car in, you know, and we were really just trying to get tough on collections, and it backfired. I mean, they'd take the tag off the car and start walking down the highway. So, you know, that's one. I think these people have issues and problems, and I think if they could pay every payment on time like they're supposed to, they'd be with Bank of America or Wells Fargo. They got issues, and I think you got to work with them, and thank God for them. That's what I say. So, Rick, let's start with you, and let's tell us about a mistake you made over the years, and then we'll wrap this up.
I think one of the major mistakes was waiting too long to have a formalized collection department, and it's only been within the last 5 years that we've done it. And we were having the ladies that do collection. They would do collections, sales, answer the phone. They did it all. Now they do it all except for collections. And that was probably the biggest mistake.
That's great. Make a dedication to collections itself.
Yes, sir.
Steve, same question. Yep, Scott.
Pass to Scott first.
For me, it probably was when I was trying to, like I said, I'm 100% buy here, pay here, have been from day one. It's probably those 2 years that I spent trying to retail and do buy here, pay here at the same time. When you have that buy here, pay here mentality, you have those, you know, when the bank wouldn't take it or they wouldn't look at the deal the same way I did, I couldn't understand. I would do that deal, so I would just do that deal instead. So that's why it didn't work for me. But I think for me, it was mixing. I know it can be done, and like I said, well, Ingram said before, for those of you who are able to pull that off, I'd love to hear how you're doing it because I'd love to get my toe into that. But that was one of the hardest things for me to overcome.
Okay, great. Steve.
So I made a lot of mistakes, so I'm not going to pick one. I'm going to do my own question. Here's something that might be helpful for you all, particularly if you've got multiple locations. At JD Byrider, we had company-owned 20-plus locations, and we invested in a big video network so that we could have centralized underwriting, and we could do video conferences with customers to talk to them face-to-face, which if you're a single-point operator, you do naturally, talking to customers to underwrite. So now I'm down at AutoSimple in Chattanooga, and I can't afford to invest in this big video conferencing system. And it was Christmas time, and Facebook was advertising these portals, these little bitty TV screens where you can talk to your kids across the country or whatever through the internet. And we thought, hey, that's how we can do this cheap. So at Christmas, they were selling those for $99 a pop, I think. And we have portals in every single one of our stores, and our underwriters have them on their desk. And every single customer that we underwrite, we do a live interview with the customer. We talk to them about why they came in. We talk to them about their credit bureau. We talk to them about how they're going to use the car. All of those things. We also say, hey, I see you have I have your cell phone number as such and such, and we dial that number and ask them to show us on the portal that it's ringing so that we know we've got good contact info. So very inexpensive way to do live underwriting if you have your underwriter sitting someplace other than in your store.
Wow, that's awesome. That's thanks for that. Rick, give us a takeaway, and then I'll let Steve give us a takeaway, and we'll wrap up.
Okay. Anyone can call me at any time. I got some cards down there, a few in my pocket. It's an open invitation to come visit, and we'll be happy to show you everything that we have.
That's great. Scott, give us a takeaway.
A takeaway. I tell you, for me, it's just stay the course and spend some good time in the exhibit hall with the acronyms. I was, like these guys, late to the table on a lot of things like DMS, GPS, CRMs, things like that, doing it the old hard way. There's a lot of great technology in there, and I would say take advantage of the exhibit next.
Yeah, my takeaway is to go to these people in the exhibit hall, and we're breaking for that now, but even if you're not interested in their product or service, go to them and ask them if they got into buy here, pay here, what would it look like? $4,000 cars or $8,000 cars, or trucks, or would you lease, or would you set monthly payments or bi-weekly payments? And so there's so much knowledge in that room. I want you to be like a sponge and just soak it out of them. I'm going to ask these panelists to hang out up here. If you have questions, remember Al from Chicago's here on the 4th row. Let's give these panelists a big hand.